Welcome everyone to my YouTube channel Accounting with Damien. In this video, we'll be looking at the cash basis and the accruals basis of accounting. My name is Damien Angelo Labroy and I am a lecturer for a degree program for over 3 years. I am a trainer for CIMA, ACCA, for O-levels and A-levels. I am also a teacher for a leading school in Sri Lanka. Other than for my teaching experience, I have worked in finance departments of organizations. I have worked in marketing as well as in office administration. Now today in this video, we'll be looking at how does the cash basis and the accrual basis impact the revenue and expenditure recognition, and how does it have an impact on the profits of the organization. So to begin with, we'll be looking at the cash basis of accounting. Now think about the moments that you looked into your bank account balance and you went, hooray, right? Your bank balance has increased, right? You have made money, your savings have increased. So when you see your bank balance growing, when you see your savings increasing, you feel happy about it. You feel a sense of achievement. Then there are also situations where you feel very bad about it, right? That is when your savings decrease, your bank balance decreases. Then you feel like you are not achieved, you are lost, right? You get a feeling of underperformance. Now, when you look at small organizations, they decide their growth based on their cash flows. For them, if the bank balance has increased, that is a great achievement for them. They mean that is success for them. But if the bank balance decreased over the time, they feel like they make losses every day, right? Now, according to the cash basis, when you recognize your income, you look at the cash inflows, the actual cash inflows, right? You physically need to receive cash. Like for an example, if you look at credit sales, when you do a credit sale, you don't receive the cash then and there. So, an organization that practices the cash basis will not consider credit sales as an income until the customer pays you the money, right? When the customer pays the money, that is when they would recognize it as an income, right? So they recognize the income based on the cash receipt basis, right? Then when you look at the expenses, like for an instance, the credit purchases, for them, purchase becomes an expense when they actually physically pay cash to the supplier. So if it is a credit purchase, until they pay the cash to the supplier, this is not an expense for them, right? They will not consider this as an expense until the cash is being paid. Okay, so the expenses are recognized on the cash payment basis. Okay, so that is the cash basis of accounting. Incomes are recognized when you receive cash. Expenses are recognized when you pay cash, right? So on screen there is an illustration, right? Now try to calculate the profit of this organization using the cash basis of accounting. You calculate the profit on your own and then resume this video. So under the cash basis of accounting, we only look at the cash transactions. So when you look at your sales, you have two sales. One is a cash sale of 7,000 and a credit sale of 7,000. So here you will not be considering the credit sale, you will only consider the cash sale. Then when you look at your purchases, you have credit purchases of 2,000 and cash purchase of 3,000. Now the credit purchase of 2,000 will not be considered under the cash basis of accounting. Only the cash payment of 3,000 will be considered. Now when you calculate profit, the equation is income minus the expenses. Now for the organization, the income is going to be the cash sales. So the income is going to be 7,000. The expense is going to be the cash purchases. So your expense is going to be 3,000, which means under the cash basis of accounting, you are creating a profit of 4,000. Right? Clear? Right. Now let's look at the accrual basis of accounting. Now think about your bill for power. Now you received a bill in the previous month. If you have not paid your previous month bill, right, does it mean that you have not incurred that power expense? Now guys, if you do not pay the previous month's bill in the current month, the electricity department or the power department will come and disconnect your power, right? You have already used the power in the previous month, which means you have already incurred the expense of power during the previous month. Now you have an obligation towards your power department to pay the electricity or the bill for the energy that was consumed in the previous month, right? Clear? So irrespective of the fact that you have paid for the power, you have still incurred the expense for power. Now the performance of the organization is calculated for a financial period. Okay. Now you can get a more understanding about the financial statements of an organization by checking my video on the basics of financial statements. Now, since we look at the performance at the period, we need to look at all the incomes that was earned during that period and all the expense that was incurred during that period. Only then you will correctly get the profit for that period, right? So to obtain an accurate image of the profits for a period, we need to consider all the income earned during the financial period and all the expenses incurred in creating the revenue. Now look at cost of sales. In your cost of sales calculation, we added the opening stock because the opening stock is an expense that belongs to the current financial period. And then when you look at the closing stock, we remove the closing stock from our cost of sales because the closing stock is not an expense that was incurred to the current financial period. It was an expense to the next financial period. You can check on my video on cost of sales to get a better understanding on how cost of sales is accounted for. Now, according to the accruals concept, remember, income is accounted for when it is earned, right? Now, when you look at your sales, if you have a credit sale, the moment that the sale happened, you transfer the ownership of your goods to the customer. Now, the significant risk of ownership of the goods is with your customer. It's no longer with you, which means you have already done the sale. You have earned that sales income, right? So the credit sale will be considered as an income under the accruals basis of accounting. Okay. The expenses are accounted for when it is incurred, right? Now, when you look at your credit purchases, you have already purchased the goods from your supplier. So now the significant risk and ownership of the goods and services, right, of the goods is with you. You own it. So you have already incurred that expense on that inventory, right? So that cost, the credit purchases, you will be considering it as an expense for this financial period, right? Now let's look at an illustration on the accruals basis of account. Now this is similar to the previous example that we did on the cash basis, but this time you need to calculate the profit of the organization based on the accruals basis of accounting. Now you can start doing it on your own, and once you have completed it, you can resume the video. Now, according to the accruals basis, all incomes earned and all expenses incurred should be accounted. So both the cash sale and the credit sale has been earned during the financial period. So when you look at the revenue, you need to look at both of them, the cash sale as well as credit sales. When you look at your purchases, both the cash purchase as well as the credit purchase has been incurred. So your total expense will be the combination of your cash purchases plus your credit purchases. So guys, the profit is calculated as income minus the expenses. So your incomes will add up to 14,000, which is your sales, and your purchases will add up to 5,000, which means you will have a profit of $9,000 based on the accruals basis of accounting. Now this $9,000 is the profit that you generated for the period. Okay. Now to conclude things, let's look at a small example. There is a person called James working for a company. James' salary for the month of April is $5,000, but the company has only paid $4,500 to James. So what would be the expense for the company if they use the cash basis? Yes, the salary that they paid, the $4,500 that they paid is going to be their expense. So if they were using the accruals basis, what will be their expense for salary? Yes, you have incurred an entire salary of $5,000 for the month of April. So that full amount of 5,000 is going to be the expense under the accruals basis of accounting. One last challenge for you. Now solve this question on screen. Guess the answer and type your answer in the comment section below. If you like this video, give it a thumbs up, subscribe to the channel, and support the channel by sharing this video with anyone who would be interested in it. See you next time.